Covered call tutorial from Market Chameleon. This is what we're doing today. Even Market Chameleon has covered call screener to gives you an edge. And why you do covered calls? Because you have a sideways market outlook. Now I'm not gonna go over the basics, maybe for like a minute or two, because there's like millions of videos about covered calls. What I am gonna do is go over the Market Chameleon screener to find an edge, to find trade opportunities that can make you more income based on what you should have paid on history. This is what we're doing today. Look at all those results. We're gonna change. We're gonna make the filters go from 420 pages to maybe one or two. We'll see what we see. But before we do that, we are gonna read a quick disclaimer and know that this is not a financial advice. I'm not a financial advisor. This is for education and entertainment purposes only. So with that being said, also my name is Evil Sonos after 40. With that being said, let's get started. Market Chameleon 7 days trial, link in the description below if you're not a member already. Now to get to the covered call screener, when you can find trade ideas that gives you more bang for your buck, more money, more income per trade, you're gonna go to screeners. Okay, step one, go to screeners, and in here, single leg strategy, we're gonna pick covered calls. We're gonna do a couple of videos about that and see what we can see. Now once we found this, we came here. I mean, let's read it real quick, but I assume if you are here, you are a little more sophisticated than the super beginner option trader that just started out, and you know what covered call is, and you're looking for ways to optimize your income. But just in case you are new, covered calls is evaluate investment opportunity to sell call options to gain additional premiums against an existing long stock. So you have $100 share, for example, and you have 100 stocks. You can sell 110 a call. It's called covered call because you already have 100 shares, and your goal is for the stock to go up to 109.99. Basically, that means that your premium is all covered. You collected the income, the option expire worthless, and your stock are now worth like almost $10,000 more, from 10,000 to 1,019, like extra 9,999. Basically, that's your goal, and anything in between. If it goes above 110, it sells your shares, but you get to keep the premium, which is nice. Strategy is often used by traders who hold long stock position to generate income. By selling options to collect premium, this approach is considered slightly bullish because it's often used by investors wish to own the stock for a long-term appreciation but are willing to harvest short-term option premium on it. Upside returns on the strategy may be limited as gains of the stock price would negate and exercise the stock all the way. So if the stock you bought at 100 and you sold the 110 call option, and then it goes to 150, you have to sell the shares at 110. So keep that in mind, but you still keep the premium. So that's the key. So let's use the filter. Now what I like with Market Chameleon is that they find you a lot of filters, and we're not gonna, as I said, we're not gonna go over 420 pages. We're gonna go over here, okay, Market Chameleon presets. And we only got one. Very simple, very interesting. So we got covered call beats stock. Okay, so maybe we can do this, and probably in the next video we're gonna do some filters of our own. But let's see just the preset covered call beat stocks only. So they filter for us the next 30 days for expiration. We got a covered call win rate above 70%. That's actually, you don't need anything more. This is good. Covered call average return, any positive. Covered call versus stock win rate. This is interesting. Strategy percent win rate versus stock percent win rate. Okay, so the covered call wins. Covered call versus stock average return. The strategy return is higher than the stock average return, the second one. There's a lot of filters. Feel free to play around and tell me what filters you like. Now, I like to go by market cap. Okay, So I like to do three things: either market cap, high to low, and then I do other stuff like win rate, like an edge, and all that stuff. So we got Apple. Good old Apple is number one by market cap. Price 222.73. Expiration. Let's see what we got for this Friday. To the 1 day to expiration right here. And it tells you, this is interesting, this is in the money. Sell the 220. Okay, interesting. For 325. It doesn't say just sell out of the money. You can even sell in the money. Assume you want to keep your share. I wouldn't do it. Not a financial advice. They could call your shares out at 220. It's up to you. But basically, if you do sell the covered calls, the 220, you are collecting $325. Let's see what we got. You already in the negative territory. You already in the money. IV rank is kind of low. You have 1.5% cushion. Apple is super optimized, as they say. Cover call win rate 83%. Cover call win rate. One option. I'm gonna do this one. This is very important. Moneyness, distance from stock. And it tells you the difference between the strike price and the stock price as a percentage. For example, the strike price is 110, the stock is at 100. That would put a 10% out of the money. Strike price is 95, that put the price at negative 5%. So I'm gonna click twice because I'm looking for covered calls, not negative, that are outside of the money, that I can sell far out of the money calls on stocks that, ideally has a high market cap. So now let's see what we got. We got Reddit. I mean, it's not super huge market cap, but it is Reddit. Let's see what we got. But this is, understand again, let me repeat. Moneyness, distance from the stock, is meaning that you own 100 shares of the stock, and then you can sell covered calls, and this is the far out of the money for you to even just to break even and still keep your shares. So I assume you want to keep your share. You don't want to sell Apple like we saw at 220 just to collect an extra premium. That's an option, but it's up to you. So let's see what we got here. Reddit, price $60, 60.54, 10 billion market cap. 16 days to expiration, October 4th, and we got 3 of those. Okay, so let's see what we got exactly. And we got the strike. Look at this, 71 strike, 70 strike, 69 strike. Now remember, the price is at 60. This is like 15% away, and this is the call bid. $62, 73 bucks, 87 bucks. 16 delta, 23, 22. Distance, 17%, 15, 14. IV, I don't think this is correct. Option IV ranks, probably need to update. Downside cushion to the break even. Okay, time premium, percent return if the stock is flat is positive. Covered call win rate, basically you got 76% chance to win. And you return on your money 4.2% for the cover call. Stock win 61% average return. Now I'm not gonna click on analysis. You can do it by yourself, but basically it's very simple. It says if you own 100 shares of Reddit, let's say you buy it right now for $6,000, then you can sell let's make it simple. You can sell the $70 covered calls for October 4th. And collect, because the call bid, you are collecting 73 bucks. So instead of paying 66,054, you are reducing this one by 73 bucks, which is your income. And as long as Reddit stays below 70 by October 4, by expiration, great. You made your money, you still own the shares. Happy campers, they say. And those are all good data, good information. These are all green. It's up to you. It's up to you, something to consider. But that's actually not bad to collect 70 bucks. And Reddit needs to go a lot, like almost 20%. I think 18%, something like that, in 2-3 weeks. It doesn't say earnings. I assume it would say earnings if there's anything in the earning play. Let's see something else that I know. ASTS, this is a lot of people are talking about it. I'm not gonna go over this one. because they can pop and dump every single day. So let's see. Again, I'm looking for ideally something that I know, like high market cap. So let's see this one. NVO was this what is this? Novartis? Novo Nordisk. It's like the third time that I'm looking at this in the last couple of videos. I really need to research what is this $600 billion stock. Comment below if you know. But let's see. Price 135.86. Okay, days to expiration 11, so September 27. And it tells you sell the covered call, sell the 152.50 call, and collect 23 bucks. Man, that's not a lot. No, not a lot. At the end of the day, that's not a lot. If you wanna, you can filter by, let's say Reddit. Let's go back to Reddit. This one, again, price 60.54, and if you sell the 68, you collect over $1, over $100, and you assume that still a 68 to 60 in the next 16 days is like 11-12% move in Reddit. Something big needs to happen. Of course, it's possible, but if it does, you still collect the premium, $100, and you still collect $800 because your shares that you bought at 6,000 will be sold off at 6,800. So you made 800 plus 100 if it happens. So something to consider. That's not a bad strategy at all. You can also filter again, and this is just one way to look at it. But if you can click twice in here, let's see by the highest premium that I collect. But also you see here, sure, I collect $40 on the QQQs, but the distance, like I'm already deep in the money. I'm looking for something that is the outside of the money you are, the better. This is all negative, so just something to consider. But let's just see what it gives us. A QQQ, for example, the 471, and it tells you sell the covered calls 430. This is assume that you already have like a lot of shares of QQQ, or you want to get rid of it. You say there's an election, you want to sell your QQQ that you bought months or I don't know when ago, and you collect 4,260, so your break even is basically this plus this, which is 472 something. And as long as the QQQ stays below that, sure, you will still get assigned, you will probably get sold, but you will keep your income. So something to consider. Again, I don't like that. I like to make things simple. I'm just gonna click the moneyness again. And yeah, Reddit is a trade possibility for the day. Something to consider. Maybe collect $75 with the Reddit $70 strike, as we talked before. It's something to consider. You can go over down the list, but you saw how we filter from 420 pages to 41. You can go over all of this. I can also change by market cap. But at the end of the day, that's covered call. You can go over to Market Chameleon, find some covered call trade ideas on a daily basis to just generate, trade small, as they say, and build your portfolio. If this was valuable, 7 days, link below for Market Chameleon free trial. I'll see you on the next one.